Do you want to plan your trade for the day? Hi, I'm CA RUDRAMURTHY, author, trader, and trainer, welcomes you to this pre-market report. If you see SGX Nifty today, it is just showing a flat to slightly negative open, about 20-30 points of gap down, and we are opening around 15,700. And in fact, today's report will be incomplete if I don't talk about Reliance Industry. Yes, Reliance Industry saw a huge fall in share price and close to 10% correction was seen in a single day on Reliance because of windfall gain tax by government. And let me tell you, this windfall gain tax is very simple. Government wants to collect as much tax as possible to reduce its physical deficit and increase the revenue. That is point number one. And point number two, you have to understand it is very simple, and let me make it a child play, that Indian rupee against dollar is depreciating now. If you see, Indian rupee was very stable against dollar at around $75 per barrel, but now for last few weeks we are deteriorating and Indian rupee is now trading above 79 rupees per dollar. This is not a good sign, and government is ensuring there are only two ways to control the falling rupee, and that is number one, ensure you will import lesser crude and you will not at all export crude oil. Now what government did, we can't reduce the import of crude because we will have a negative impact on our production, on our industry and tertiary sector. So what government did, it ensured if you export your crude oil outside India, then we will charge you windfall tax, so that company like Reliance Industry, ONGC, they have to sell crude to the local OMC, that is oil marketing company, and they are now restricted to export, because if you do so, you will be levied a windfall tax. So thereby government is ensuring crude oil is given to local oil marketing companies and it is not exported. If you do that, you will have windfall gain tax. And second most important point, government is also curbing gold import, because when you import gold, there is no productivity involved in that at all, but you have to make payment in dollar terms. So gold import has also been curbed now by rising the gold import duty. Earlier the rates were 7.5% import duty, and on top of it you used to pay the cess, which used to be 5%. So if you total both, it was about 12.5%. Now they have raised the import duty by 5%. From 7.5% it is made 12.5%, and adding the as usual 2.5% on that says, if you get together, now it is 15%, plus already we have the 3% GST. So gold import has been made very difficult, and the prices of gold already soared because of this news by about 2 to 2.5% on Friday. And let me tell you, this might indirectly encourage smuggling, but what happens is government, which has to make payment in dollar terms officially for all the gold you import officially, gets automatically reduced. Thereby all these measures for both crude oil and gold is done to ensure rupee does not fall more against dollar. I'm sure this pre-market report is so easily in simple language telling you why what is happening, and even a common man, forget your educational qualification, even if you are 10th fail, any child can watch this video and understand very easily through common sense why and what is happening around us. Yes, dollar now is not at 75 but at 79 plus per dollar. Rupee is getting depreciated. To ensure this does not alarm up much more, and this will have an impact on fiscal deficit, government is controlling both on one side, ensuring there is no export of crude oil. On another side, there is no much import of gold. Thereby, rupee can now start strengthening against dollar. This is a very, very important news. Now, the next question is what next? According to me, I feel this will not end up in a very short term, one day kind of a move. For some more days, this week also we might see the impact of windfall gain tax on stocks like Reliance, ONGC, Chennai Petro, MRPL, and so many similar companies. However, for oil marketing companies like BPCL, HPCL, Indian Oil Corporation, all these companies will have a positive impact because of this news. If you also see, most important is crude oil internationally is now around $111 per barrel, and if you see Nifty levels, it is now in the range between 15,700 to 15,900. Even though we opened gap down on Friday and we had negative impact on stocks like Reliance, ONGC and all, there were other stocks like ITC and also especially FMCG as a sector started supporting the market, and even banks ended positive on Friday. If there was no fall in Reliance, you would have seen even Nifty on the positive side. But one very crucial analysis what I have done on my technicals, let me tell you that on a closing basis, see last 4 days, Nifty is closing lower and lower and lower. So on close to close, we are falling. That means a positional trader would have made money only on the short side. But if you are an intraday trader, see the last 4 days from the low, Nifty has on an average recovered 150 to 200 points. So every day we are gap down opening, and from there we are closing with at least a 150 point on an average up move. That means as an intraday trader, those who bought the dips, they are making money. As a positional trader, if you would have shorted the market at the close and then covered the next day morning on the gap down, you would have made money. So thereby you are learning today time frames are very, very important. So as an intraday trader, the view is different. As a positional trader, the view is different. Now let me tell you stocks to watch out. ITC will definitely continue its outperformance, and every dip is a buying opportunity in ITC. And people who want to make safe money, what you do is sell out of the money puts of ITC and eat all the premium what is available. Now some of you who are new to option market will be telling, why to sell put? We can as well buy the call. According to you, with limited knowledge what you have on option market, you might think selling calls and buying puts or other way around, selling puts and buying calls are same. Answer is no. There is something called as time decay. If you don't understand what is time decay, in simple language, if you go to my playlist in my YouTube channel Rudralogy, you will find basics of option market covered very clearly. I've even covered option Greeks like delta, theta, gamma, vega, rho, all these things in a very simple way. There you can understand time decay or theta. And let me tell you, to make it very simple to you, sell put options, even if it is one lot, it is enough, and safe money can be made by selling put options deep out of the money of stocks like ITC, whereby you make money on time decay. Also from mid cap, Federal Bank is looking very strong. You can even here sell out of the money put options and ensure time decay plus the directional move will support you. FMCG as a sector can outperform, and even automobile as a sector can outperform. Stocks like Tata Motor and even your Maruti and M&M, which has already performed in a huge way, and I have already told you lot of buy calls many a times on ET now also on both Maruti as well as M&M. Now Tata Motor can definitely do the catch up, but along with that ITC, Federal Bank, these are stocks, and sector wise FMCG can definitely do good. I'm sure this news is giving you lot of inputs in a simple way to help you do a profitable trade. I'm sure you will join hands with me to spread right financial literacy by forwarding this video to many people like you, and help me to serve more and more retail traders and to make them profitable. Thank you so much for watching this video, and do make a lot of notes every day. And with this, I wish you a profitable trading day. Thank you so much for watching. Signing off, Rudramurthy.